Greater Vancouver's commercial real estate market finished 2025 in retreat mode, with investment activity pulling back as macroeconomic volatility and policy uncertainty kept capital on the sidelines. New data from Altus Group shows total commercial investment volume in Vancouver hit $9 billion in 2025, representing a 14% decrease year-over-year. The contraction was heavily influenced by an atypical pull forward of activity in Q2 2024, when investors accelerated deal closures to preempt a proposed capital gains tax hike that was ultimately rescinded. Across Canada, commercial investment fell to roughly $51 billion in 2025, an 8% year-over-year decrease, but Vancouver registered the most significant regional decline. In the first half of 2025 alone, Vancouver investment volumes were down 33% compared to the same period in 2024, the steepest drop among major Canadian markets. The broader pullback reflects what Altus called a pronounced pullback as investors remained hesitant to deploy capital amidst sustained macroeconomic volatility. What drove the slowdown? Geopolitical tension peaked in mid-2025 and domestic economic sentiment shifted, creating a wait-and-see approach that characterized much of the year. The Canada-United States-Mexico Agreement, CUSMA, helped stabilize cross-border confidence, but tariff wars and recession fears prompted investors to shift into preservation mode, making strategic adjustments for maximum flexibility. The Bank of Canada maintained the overnight rate at 2.25% on December 10, 2025, after two consecutive reductions, signaling a holding pattern that eventually gave investors more transparent outlook for the cost of capital. Sector performance. The slowdown wasn't uniform. The retail sector was relatively stable, with $3.5 billion transacted, up 5% year-over-year, thanks to food-anchored strips and redevelopment plays. Industrial posted a 29% decline as availability rose and demand waned. Residential land experienced the greatest contraction at -43%. Office saw declining availability rates and Class A properties dominating leasing. Downtown Vancouver office vacancy dropped to 10.7%, with Class A at 8.6% as a flight to quality drove absorption in trophy towers. Investor sentiment. Altus Group's ITS survey showed Vancouver reported a negative momentum ratio in Q4 2025, meaning dominant investor sentiment moved toward divestment and portfolio rebalancing rather than new acquisitions. Halifax, by contrast, surpassed Vancouver to secure the top position in investor interest.